Hello everyone, this is the video presentation of Group 5. So, accounting. This is an art of recording, classifying, and summarizing the significant manner in terms of money, transactions, and events which are part in financial character. So, financial accounting, it is a process of preparing financial statements that companies use to show their financial performance and position to people outside the company, including investors, creditors, suppliers, and customers. So this is one of the most important extensions from managerial accounting, which by contrast involves preparing detailed reports and forecasts for managers inside company. So financial analysis and reporting help to answer a host of vital questions on all aspects of your company's financial activities. So giving both internal and external stakeholders rather, an accurate, comprehensive snapshot of the strategic as well as operational metrics they need to make decisions and take informed action. So there are also procedural steps in accounting. So this is journalizing or recording. Second one is posting. The third one is preparing trial balance. Fourth, adjusting entries. Fifth, using worksheets. Sixth, preparing financial statements. 7, closing entries. 8, preparing the post-closing trial balance. And the last one is reversing entries. Thank you.
Financial statement, the final product of the accounting system. They are constructed representation of the financial position, financial performance, and cash flows of an entity. Financial position, it means, is the current balance of the recipient's asset, liabilities, and equity of an organization. Final performance is an according summary that details a business organization, revenue, expenses, and net income. Cash flow of an entity. Cash flows is the next amount of the cash that an entity receives and disburses during the period of time. A positive level of cash flows must be maintained for the entity to remain the business. The complete set of financial statement of financial position. 2. Liquidity. The ability of the business entity to settle the current majority financial obligation. Financial structure indicates that amounts of capital or sources financed by creditors and the amount of provided by owners. Capacity for adaptation refers to the ability of a business to invest the excess of available resources and raise necessary funds through borrowing without difficulty in times of exigency. When the business has a very high capacity for adaptation, it can easily find funding resources when the needed arises. Statement of cash flows. Report cash flows, cash inflows, and cash outflows during the period classified by operating, investing, investigating, and financial activities. And note on the disclosure policies. For example, the item cash and cash equivalent in the statement of financial position must be explained as to measurement of in the note. Also, an entity shall disclose of the summary of significant accounting policies in the following. The measurement basis of the base of used by preparing the financial statement and other accounting policies used that are relevant to the understanding of the financial statement.
Financial statements are structured presentations of the financial position, financial performance, and cash flow of an entity. The purpose is to provide information about the result of operations, financial position, and cash flows of organization. There are many accounting concepts, and these are some of them. The going concern and the accrual basis. The complete set of the financial statements are statement of financial position, statement of comprehensive income, statement of changes in equity, statement of cash flow, and notes. Instances to change statement presentation. It is apparent following a significant change in the nature of the entity's operations or a view of its financial statements. Conditions for the change in presentation. The change presentation provides information that is reliable and is more relevant to users of the financial statements. Offsetting. Reducing or negating the balance of another account that is paired with. Comparative information is provided for narrative and descriptive where it is relevant to understanding the financial statements of the current period.
Disclosure of accounting policies is proposed is to disclose any affair or event that influence and financial statement. Accounting policies. Accounting policies are specific principles, based conventions, rules, and practice applied by an entity of in preparing and presenting financial statement. Limit limitation on retrospective application. 1. When it's impracticable to determine the period specific information for one or more prior periods presented, or 2. When it is practicable to determine the cumulative effect at the beginning of the current period to all prior periods. Accounting statements is a measurement or recognition in the financial statement of an account disclosures transactions or event that generally involve subjective assumption and measurement uncertainty. Statement may be required on the determinations that following bad debts, inventory, absolute signs, absolute signs, fair value, and financial assets or financial liabilities. Useful life of the depreciable assets. Warranty obligations, errors, and accounting errors is an error in an accounting entry that was not intentional. When spotted error or mistake, next is often immediately fixed.
Statement of financial position. Statement of financial position is the structured financial statement that show the asset and liabilities and equity of a business entity as the given date. Assets are resources controlled by the entity and are a result of a past and events from which what economic benefits are effected to flow the entity. Liabilities are the present obligation and entity rising from the past events, the statement of which the expected to result in outflow from the entity from resources embodying economic benefits. Equity is the residual entries in the asset of the entity after the including all its liabilities. Recognition of the assets and liabilities. Recognition in the process of incorporation in the statement of financial position. And the means of definition of and the element of the certifies are the criteria for the recognition set out in frameworks. Criteria of recognition. Assets Assets and liabilities should be of recognize it. A. Is the probable that any future economic and benefits associated with the interval flow, flow, flow or from the entity, and B. The item has the cost of the value or the combination of liabilities. Information to be represent convenient fees to the statement of financial position. A. Property and plant equipment. B. Investment property. C. Intangible asset. D. Financial asset and including the item A, H, and I. E. Investment and accounted for the using equity method. D. Biological asset. And thank you.